Welcome to Options Tender. It is Tuesday, 10/26/21. It turned out to be Turnaround Tuesday. We did gap up, and we thought we were just going to gap and go, but we turned around, and all sorts of Tesla shenanigans and all all sorts of things were happening in the market. But what's important is the market pulled back. We're looking for a reversal, and I think we're going to get that pretty soon here. So, all right. So we are going to check out SPX on multiple time frames. I'm actually starting with the weekly chart this time because I just thought it was interesting where we stopped, where we paused here with a pause candle. The week's not over, so we have to let the week candle develop and see what happens. But we're going to go through multiple time frames there. For the free video, check out VIX, and then we'll go over to the Patreon video. If you want to join that, it's $5 just to start off, first tier. And let's see here. Go down to that bottom right-hand corner, hit that Options Tender logo if you're new here, and subscribe. So let's get into it. Now, I started with the weekly time frame because I want to show what was happening where we stopped. So what I did was did a extension from wave 1 to 2, and from 1 to 2 to see where the 3 might hit. We're looking for to see what happens with the third wave. If we are still in that third wave, meaning that this would be over here, or if it topped out already, we didn't quite hit the 4605, which is 100% of wave 1. If we hit that or exceed that, then we know that wave 3 is the longest wave so far. In Elliott wave theory, wave 3 cannot be the shortest. So what does that mean for us? If we do reverse here without being the hitting that 4605.7, if we do not hit that, that means that wave 3 is shorter than wave 1. Now that means our next wave up, wave 5, cannot be longer than wave 3. So at least we have a cap on that. We have a spot, a reference that we cannot get over. It can be as short as it wants to be as long as it exceeds wave 3 after pulling back to wave 4, but it cannot be longer than wave 3. Okay, so that's just the interesting part about that. We are still over this rising pivot. We're over all the MAs, so everything's bullish on this chart, just that reference point there. On the weekly, the only thing holding us back at this point is this, the momentum is heading down. We're starting to test that. The leader line has started to test the MACD. Moving average line. So we're looking at some decision points here. Also, the RSI is creating another divergence, starting to curl over. So this may be a good spot for a reversal. Now, if we do get that reversal on the weekly chart, we want to look for that pivot. First, we have a trend line that we had to move because we made all-time high. So we got to get through the trend line, the MAs, that rising pivot. If we get under that rising pivot, then I do believe that we'll test this area here, which will be the 382 and the 4040. 382 area, and this would have been an expanding flat. So that would have been our stop here, or our high here, our A, B, expanded B, and then C to wherever it goes down. It doesn't even have to make new lows for this to that. Then it'd be a running flat. So we have to. It's very complicated, but we have to continue to monitor this. Let's go over to the daily. We're spending a little bit too much time there. On the daily, we move down. A, B, C correction could be over. And then if for the bulls, your count is now a 1, 2, 3. This might be the end of wave 3. We'd get somewhat of a shallow pullback for wave 4. And then we move up to wave 5. Then we'll be looking for that as being a completed wave 1. And then we'll look for a pullback, a little bit deeper pullback after that. If you are in the bear camp like I am, that this is still a correction, that this is an A, you see the larger yellow A, this is a B, an expanded B, and we're looking for a C to come down to either the 23.6 or the 38.2. So this should be a 3-wave down, 3-wave up, and a 5-wave move down. Okay, so that's what we're looking for. If you're a bull, this is 1, 2, 3. We should get a small pullback for 4, and then 5. All right. That is all I want to show on there. The momentum's up. The RSI is up. We have bearish divergence, so we don't confirm a bearish divergence until this yellow line crosses over the blue line. But we'll have to see price action happen first, because this is sort of a lagging indicator. But this candle action here, very important. That's a graveyard doji, evening star. It doesn't matter what you call it. This is a very bearish candle, so it's possible that we have our reversal here, but in order to confirm this candle reversal, we need a follow through, which would be evening star setup. You have the move up, the doji candle, and then a follow through red candle after that. So that would be very necessary for this to even be considered a bearish reversal. Okay, if we just start moving up or gapping up, then that's negated, and we continue our rise to the upside. All right, 65-minute. Then we'll move on, get this done. So we hit our options expected move for the week, nailed it, almost to the penny. Pulling back, we did count a nice. This is possible impulse wave down 1. It came back to a 618, and we actually played a small SPY put play lotto for tomorrow. I didn't get that in the options room. Sorry, guys. So we have a 1, 2 possibly, and then we should be looking for a wave 3, 4, 5. We should get 5 ways down if this is starting that descent for the bearish price action. We have our bearish divergence in the RSI and the MACD, so that works out perfect for this plan. So we should see an impulsive wave 5-wave move down, and then a 3-wave move up, and then a much larger 5-wave move down, 3 up, and 5 down. Okay, so that's what we're looking for. In a nutshell, let's go over to the VIX futures, see if we can see anything on there. We did, with our patrons, we have official VXX trade out there also, and the VXX is an ETF that mirrors, it trades for the VIX futures here. So we're looking at, we had this pullback, looks like a 3-wave move pullback, and getting a little bit perky here. So we really want to get over this 20 range for the VIX, but we had our big gap up, and what needs to happen with that contango, the VIX and the VIX futures need to converge. The VIX is around 16 and our futures is around 19. They need to converge. So either the futures has to come down and fill this gap and come down to that 16, 15 range where the VIX is, or the VIX has to go up and catch up with the VIX futures. There is no other choice. That's what happens. And so depending on which scenario plays out is dependent upon what happens in the market. So if the VIX futures decides to come down, that means the market is going up. And if the VIX decides to catch up with the futures, that means we are going down. So in the bear scenario for the market that I think we're going to play, then this is going to have to pop up and start hitting our targets. All right. So that's all I want to show here on the update. Patrons, we have a lot to go through, so stick around.